Okay, so first I want to thank everybody for joining. This is probably the 5th or 6th presentation we do with my Broker Pro, and it's always just, I'm overwhelmed with support of how many people want to join and listen to, kind of my story and how I grew my business and how I've grown my referral partners and that kind of stuff. So it's been a really fun 6 months kind of getting to know everyone, and thanks again just for kind of being a part of this growth. So today's presentation is how to present to accountants, and we have a special guest with us, Adil Hosenbokas, who is my personal accountant. I'll wait to get to that slide. But so a quick table of contents, and what we're going to go through today is we're going to go through just introductions about myself and Adil. I'll go through the presentation pitch, which is the actual presentation for those of you who purchased it or maybe purchase it later or create your own. It's some good inspiration. And if you're a part of the BRX group, you're offered all of this stuff for free as well. So be sure to check the marketing site. And then we'll talk about how to find accountants. And then once you find them, what do you do now? Because that's the biggest question most people have. Okay, now what's next? Kind of a follow-up schedule in the cycle of working with accountants. And then we'll jump actually into Adil's presentation where he's going to talk about his perspective on working with mortgage brokers and what he's looking for. Also talk about, claiming income versus not claiming income. So him and I will kind of do work on that slide together because obviously we have programs and policies that work for both in the broker channel. Then he's going to give us a couple tips for 2022 with our personal taxes, since we're all, probably everybody on this call is self-employed, and what to do to prepare for a successful 2023 with your taxes. So it is a new year. It's a great time to get organized and start some forward planning on what that's going to look like for you and your business. And then we'll open it up to questions and answers. So at the end of the presentation, because it is recorded, feel free to jump off, but we will stay on the call for a little bit to answer some questions, share our screen, and help out with whatever you're looking for at that point that we either didn't cover or you had a question about. So a little bit about me. Many of you have been on my previous call, so I'm just going to cruise through this. But I was a licensed assistant to a very high volume producer mortgage broker in 2018. She did about 75 million. So I was so lucky to learn everything that she kind of introduced me to. I got to obviously touch a lot of files, 30, 40 files per month. So I learned really quickly the ins and outs of mortgage brokering and how that looked like, and just the process and client management and stuff like that, and how to gain relationships too. So I owe a lot of my success to her. When I decided to go independent, I actually transferred over to the dark side, to the bank, and I was a commission-only specialist with BMO for a few years. I had to start my business, obviously, from the ground up because I couldn't bring any of my previous jobs because that belonged to the other broker. So I went from 0 to 44 million in sales in 1 year. And the bank, a lot of people say, well, yeah, the bank gives you leads. Well, they actually don't. So it was just the same process as you guys. I was door knocking. It was exhausting. It took a long time to become successful, lots of tears. My husband can attest to that. He's on the call. I wanted to quit multiple times, but within, by the time 2020 rolled around, I won Conference of the Stars, which is a national award across Canada. And I won a lot of BC awards as well. I'm in British Columbia. And then in 2021, my husband and I started to grow our family. So that's when my husband got licensed and actually took over the underwriting for our business. And we transferred over, I transferred from the bank over to the broker channel again, where we started mortgage tech. Like I mentioned earlier, originally under DLC, but we've now transferred to BRX mortgage for us and our team. We also started insurance techs, which is just kind of a side business for insurance referrals. And then in 2022, I started my Broker Pro actually on a whim. A lot of brokers reached out to me. They wanted help with their social media and some growth. So it was actually just kind of random, and it really grew to what it is today, which has been super exciting. And then when I joined BRX, we actually partnered and now offer all of our basically templates, training, and everything for free to all of their, I think they're up to 170 or 80 agents now. So it's been an exciting, we only started it in July, and it's been a really, really wild ride, but I'm super appreciative for it. This is Adil, so I'll just kind of quickly introduce him because Adil, like I said, is my accountant and my husband's. He's personally helped us grow the three businesses that I just mentioned, planning and how that looks like for growth and what to do if we ever want to sell our business, going from sole proprietor to incorporated. There's so many moving steps when you are like a business owner that we aren't aware of, and Adil has just really educated us and guided us through that transition. So I'm very appreciative for Adil as well. So Adil, I'll let you go through kind of what your journey looked like.
Hey, thank you very much. Yeah, it's going to give you a little bit of introduction about me. My name's Adil Hosenbachus. I've been an accountant for about 14 years now. So I started in 2008 as just a co-op student. So I was going to university, I started as a co-op student to see if I liked it, and it went really, really well. So as soon as I graduated in 2011, I joined a big company. You probably know it's called BDO. It's an international accounting firm, one of the top 6 biggest firms in the world. So I was there for 13 years. So I started in 2011, and I fast-tracked through the CPA program. I got my CPA within 1 year of graduating university, which was tough, but I just put my head down and got through it. So then once I got my CPA, I just kind of forward-tracked moving into what can I do differently in the accounting world. So a lot of people just think of accountants as just people are just gonna just sit in the back office, count numbers, and they're not really social. They don't really go out there and meet people. So I kind of took it upon myself to kind of build our company up in the community, make lots of referral contacts. And so in 2014, I won a national award. So our CEO from Toronto office, he came down to a small town called Kamloops, where I'm from, and he presented me with an award called the CEO Award of Excellence. And it was just for kind of building up the firm, bringing in revenue, kind of all, and then also hitting all my targets for actual work. So it was just kind of an award. I didn't even know it existed, but I got presented with it. It was pretty cool. So then after that, so I've been at BDO up until last year, like 2021 is when I was going to get promoted to partner. So that's kind of like the end goal when you're an accountant, is to get promoted and become a partner and run the firm. But as I was getting promoted and putting my name up for partnership, I just kind of did my due diligence on it and just is this what's going to be best for me? And I figured out, no, I think what's best for me is to not work with a big national company. It's just kind of run my own company or be part of a smaller company that doesn't have anyone else above you kind of pulling strings. So I quit before becoming a partner, and I joined a small firm called Toom Harrington, and with the hopes of becoming a partner. And there's only maybe 10 people there. So it went from like a big firm to a smaller firm. That was just about a year and a half ago. And then I just kind of realized since I quit, like I've been working with Sarah and Lucas and made a bunch of other partnerships, and it's been going really, really well to the point where I've already outgrown the firm that I'm with. So just this month, I've started my own accounting practice here in Kamloops called Hosenbachus and Company. And it's going live. Official opening date's February 1st. So we're just kind of in the midst of transitioning right now. So that's kind of where my career path is. But and I want to talk a bit more about it, but just kind of working with Sarah and Lucas and working with our clients, we've had a lot of success. So we'll go over that in detail and how you guys can make those kind of same partnerships.
Thanks, Adele. Really excited for you and your new business and this new team hopefully to come too. Okay, so what we're going to kind of go into now is the actual presentation. So before I get started, this is kind of a presentation I've used for accountants as well. Actually, one of the accountants that Adil works with and some others. So they found it very informative. It's not going to have a lot of information as far as like T1 generals and, business financials or anything like that, because you have to assume that that the accountant actually knows this stuff beforehand. So you don't need to educate your accountant on how to read a T1, because if they don't, maybe they shouldn't be an accountant. So you'll see that it doesn't have a lot of that stuff. It dives into some programs and policies and just kind of how it works for me. And we'll go through at the end, how to find the accountants and what to do next. My goal is always, when I approach them, that I want to do a presentation, but it's more to familiarize myself with each of the slides so that when I get there and they most of the time won't have time for a presentation, that I can speak naturally about these programs and policies. And then within a few of the next touch points you have with your follow-up with your accountants when you're trying to create this relationship, then hopefully you can establish time to go through this presentation. So in the meantime, you know, you're going to email, you're going to do this and that, but it's good to really understand what the presentation looks like, just to be fluent as well and what we can help and offer them. It will vary as well depending on the programs and policies that you personally use. So when I created this presentation, this was more policies and programs that my husband and I used. So we'll get started here. So self-employed mortgage solutions, kind of a presentation just to pitch for specifically accountants. You could use this for realtors as well if you wanted to really tweak it and do a presentation with them. So again, here, just your mortgage company and a catchphrase slogan with your picture. And then this is just kind of basically the struggles that self-employed people have. So what you're explaining to the accountant here is buying a home as you're self-employed can feel like an impossible task. And that's true. As we all know, we're self-employed. If you've dealt with self-employed files before, it can feel like pulling teeth. So we want to make sure that the accountant understands that we actually, as mortgage brokers, have more options than the bank, just one, you know, that fit outside of a banker's box. So some of the struggles would be that the person is self-employed for less than 2 years. Another struggle would be that they write their income down too low to qualify for financing. Another struggle would be money in their corporation and not as personal income. So those are all things that self-employed people do. Us as mortgage brokers, we are trying to resolve and be the problem solver with our products and programs. So working with accountants to plan ahead for future financing. Excuse me. So here we talk about mortgage brokers have access to lenders who consider BFS, business for self, less than 2 years. You know, a lot of them will kind of go into the programs a little bit more, but most of them are kind of offering this now. Work on writing their income up higher for a 2-year higher average and use the stated income program, or use the stated income program, I should say. Use of retained earnings or even cash in the company is another one, as an asset added back to their income, or high net worth programs. So here our pitch, this slide is really to pitch to the accountant that we're here to help with forward planning. So especially right now, because accountants are going to be getting, you know, really busy with their tax season, we want to make sure that they understand that we are a resource to them and their clients, that we can help with that, create a hypothetical 2-year average before they lock in that number in stone. So when they write their income down or up or whatever they decide to do this year in 2023, we can help before they even get to that point to kind of forward plan if they think they're going to buy a house. And that's kind of what this slide talks about as well. And did you know personal income used on self-employed clients in 2022, PITR is your T1 generals, will be used for calculating financing needs until 2025. And what that means is, so in 2023, we've got once we start working on their taxes and helping them buy a home in 2023, we're using 2021 and 2022 taxes, right? So next year we'll be using 2022 and 2023. So 2022 doesn't really disappear until taxes are done in 2025. So that's a long ways away for that 2022 to be written in stone for a few years now if they want to have a higher 2-year average, right? So that's where that forward planning really comes into play, because you're like, what you write down on your income this year will have an effect for years to come. And it's really, that's educating sometimes the accountants. You know, Dill's really strong on forward planning, so he understands that. But some accountants as well, it's more of a tax and a money game, right? So they're like, we want to write the income down. They don't think about how long this year's taxes is going to stick around for this person who is buying property personally or in a holdco or something. So for traditional self-employed mortgages, that a 2-year average is required, and what we call that is, you know, like verified income. So that's one of the that we have access to. You know, if people claim and have a nice high year 2-year net income average, then almost any of us can help them. The bank can help them. It's pretty straightforward application at that point. You know, sole proprietor, we all know 2-year net average plus, 15% in some cases. The dividends and T4s is 2-year average. And then some of them, the retained earnings that, when we get into incorporations and stuff, may add back to income. But generally, traditional is the easiest route for us to go, but that may mean that the client has to claim more income. So we'll go through the benefits of that as well. Stated income, this is pretty actually rare. I came from Bank of Montreal, so obviously we didn't have a stated income program. I was pretty excited to get access to it once we came back to the broker channel. And actually my husband, who does the underwriting now, he does the stated income a lot, and a lot of the clients that Adil sends over, we use this program because of the benefits it has. So having the accountants understand that as well. You have to remember the accountants are already so good with numbers. If we can explain to them the basics of these programs, by the time they send us leads, in Adil's case, he works with a lot of like fitness coaches. So when the fitness coaches come over, Adil already has looked at the numbers, and it's almost like a qualified deal. They're, in my opinion, way better than financial planner leads or anything like that because of how much the accountant understands the numbers. So going through the stated income program with them it has its benefits. So basically with this program, we're telling them that the client has to be in business for at least 2 years. In most recent years, gross income less hard write-offs. Sometimes I use the reverse of that. I basically say gross income less fluffy expenses, the ones we write off. Just because we can to claim the lowest income. So we're trying to find, somewhere a magic number of stated income between their gross and their net. As some of you know with this program, or if you don't know, it's a very minimal documentation required. Of course, as a broker, it is our duty to go through all the documents, the T1s or the business financials or anything like that to come up with this magic stated income number. But we may only have to give something like a business, 2 years of business licenses or something like that as well, right? So the catch with stated income, though, it is 10% down and a max, for most cases, $600K loan. I think some lenders are moving, this might be changing a bit, but for the most part in the A side, we do see a max loan amount. So definitely, again, always review the slides and make sure it matches the lenders that you use the most, right? Or your area as well, because in the GTA and Toronto area, or so GTA and GVA, this number may be higher as well. Default insurance is required and is offered at a premium. So if you've done this program before, it can be quite pricey to go this route, but a great alternative. They get the best rates. They do get a default insured mortgage, that kind of stuff. So the premium is a little bit higher, and that's where you'll decide if it's best to go alternative and just pay a 1% fee versus the default insurance fee. But for the most part, a great program for sure if they fit with it and have just 10% down. At lender and default insurer's discretion for approval, of course. So the stated income, like I said, it is kind of like a magic number. So basically the lender will review the whole and decide if it's something that makes sense for that industry, the reasonable write-offs and all of that as well. So that's where we do our due diligence prior to submission. But just as far as educating the accountant, these are great touch points to kind of go off of. The less than 2 years is a great program for somebody. I kind of put it in here, like example being like a carpenter who now owns his own construction company, or even like basically anybody, like somebody who worked in an office, let's just say as a chiropractor, but now owns his own company. So that's a great transition program too. So you can use a 2-year average or the 1 year depending, and each lender is a little bit different. So for us, again, due diligence, we would work with our favorite lender. There's a gross up for the sole proprietor, which is really nice, and they can do as little as 5% down with this file. So that is really awesome as well. So big savings there for somebody who's making that transition from their current job to the self-employed world. And then your accountants would be more familiar with some of those people new to the industry industry, because that's mostly when people start approaching their accountants is when they become self-employed, right? So a lot of new business owners will start to approach accountants. So having some knowledge about this less than 2 years program is great for them to know as well. Alternative lenders. So I always joke and say alternative lenders are like the bad boys of banking, right? They break the rules, you pay for it. So basically with these ones, we love alternative lenders for self-employed. Even myself, like, we don't plan on claiming too much income, so alternative is likely the way we'll have to go if we ever need future home financing. But you know, you can do 6 to 12 months business bank statements to use more, like, closer to that gross income. It does work for people with poor credit. Not necessarily that people who are self-employed have poor credit. It's just that program ties in to both, right? But debt servicing isn't that exact 39 and 44. As most of you guys know, we have some who are 50-50, some who are even higher than that. If we get to that 65% loan to value, they really start extending those ratios if possible. Slightly higher rates, as some of you guys have seen, and they do have a lender fee, which is typically that 1%. So between these two, that's really where you're going to do your forward planning with the accountant, because as we talked about the stated traditional and then stated income programs, that's where people are claiming their income and paying a high tax usually if they're qualifying for a home. But in this alternative side, they may be able to but pay less tax and then pay less of that default insurance premium we talked about with the stated income, and move over to this alternative side where it's just 1%. You know, I don't know the stated income default insurance off the top of my head, but it is pretty steep compared to like traditionally. So if you can kind of calculate the difference between the two, or maybe the max loan amount is kind of restricting you, then we move over to the alternative side, and it can be a lot better of a program for the client, and then you can help them get into a mortgage now, and again, do some forward planning to either get them out or kind of move forward from there. But again, this requires 20% down. So they're going to break the rules, but you do have to have more money down as well, right? So did I skip one? No, there you go. High net worth. We've got access to quite a few, depending the company you're with, but you know, TD, and they all great high net worth programs. So you can definitely work with whichever one you prefer and change this slide. And I kind of go through it at the bottom here. Well, let's just start at the beginning. Perfect for clients that don't fit traditional income requirements. So the people, so they either don't claim a ton of income, but they have large assets. As far as the RSPs, we can usually use a certain value of those, you know, a percentage, not the whole amount, because obviously they'll get tax-free, non-registered, that kind of stuff we can kind of pool, and sometimes even the assets within their company. So definitely this is very lender dependent. So be sure to change the slide before presenting to choose your favorite program, or go through a couple options too. So I kind of talk about the two different ones: minimum high net worth value versus dollar for dollar. So for example, like TD has a really strong high net worth program. I believe it's like 500K you have to have minimum. Don't quote me on that, but something like that. But then they're very flexible. That's after down payment, of course. I've got here, high net worth is pretty much always after down payment. What are they left with after? So TD has a really strong program, but that number is really high for them to get access to it. And then whereas we have other ones, I think maybe B2B or some other lenders, where it's a lot lower of a number, and it's where it's called dollar for dollar. So that you have to figure out what the client qualifies for at 39 and 44, and then they need dollar for dollar what they don't qualify for after that. So again, we just, compared to the banks, have a lot more options. And like I put here, equity programs for alternative lenders as well. Perhaps they already have homes as assets. Oh, Jaden's saying TD's has been revamped. So yeah, it may be changed. I do remember the BDM talking about how they may be going dollar for dollar, and I said no. But yeah, definitely look and see which programs. I know Manulife has a really good one if you have access to that program, and that kind of stuff. So you can tweak this to your needs, but of course, just letting the accountant know that we have options outside of what we just presented if the client has really strong assets for us to present to the lender to offset the risk and mitigation of high debt servicing. OpCo versus HoldCo. This is like the great debate for sure for self-employed people. So it's just for them to understand their options. First of all, I always say with this, I say talk to your accountant and talk to your lawyer before. Like, I don't generally provide advice on what people should do for this. I have my own personal opinions, but this can have a major impact on how, one, their taxes go moving forward. I'm sure Adil can relate to that. And two, the risk involved with their companies and their properties being tied together. So I really encourage, this, we want to educate the accountant that we have options for this in the broker channel. But again, this is where the teamwork and the collaboration, where you're going to help forward plan for these major decisions before they actually buy a home in their HoldCo or their OpCo. But of course, like I said, we have the options. Operating companies, we do have options for that in the broker channel, not as many, of course, but it is traditionally more of a commercial financing aspect. So higher rates, fees, and upfront costs, that kind of stuff for operating companies, unless we can do it in the broker channel. But again, it is a little bit more limited. Holding companies are a lot more common, I would say, and they have the personal guarantee. We're still using personal income to qualify them to put these properties into the HoldCo. We can do, standard residential financing, can only be for the purpose. Oh, so what I'm saying here is basically the holding company should only be for the purpose of real estate. If we really want to have the flexibility to shop around, I have seen some leniency in that in the broker channel, but as far as even some of the banks go and stuff. And then I do point out that there's less liability of having property in a HoldCo versus in your operating company, right? You don't want the operating company to get sued and now your rental property as an asset is at risk. But again, I try not to give too much personal advice because that should be left to the accountant and the lawyer before this client makes a major decision like that.
I got one quick thing just to add on this slide, because one other thing is when people have their operating company, that's like your actual business. If you buy a property in there and say one day you grow your company and someone wants to buy it from you, now do you want to sell all your personal real estate and everything like that in it?
Great point.
So we kind of keep the holding company like the investment company. So then if you one day you did want to sell your company, you still keep all your assets.
Yeah, great point, Adil. I never even thought of that. I always thought about the liability aspect.
Yeah, that's another reason.
It's so true. I've got like one of my clients has purchased like 6 rental properties personally, not even in a HoldCo, but he's been starting to ask questions because his operating company obviously makes a lot more money now that he's claiming less money and he's been in business for a while. And I was like, oh, like I said, I just said, talk to your accountant, talk to your lawyer. So yeah, great point. Because yeah, if you have kind of some plans to sell in the future, or you don't know what's going to happen with your business, understanding your options is the best way to move forward. It seems I put here self-employed people tend to buy and invest in real estate as well. Like it seems like a lot of the time as their company grows, they want to invest in rental properties or commercial properties. So as you build these relationships with one, the accountant, and then two, with the actual client themselves, you'll notice this growth. We've helped lots of business owners buy multiple properties strategically with each lender because of, the doors rule, or, how many properties each, lender will allow, the add backs versus the offsets. So obviously that's our job, but it's making sure the accountant knows that we understand these options and that we do actually have the ability to strategically work with our clients to find them the best options for them to grow. So when buying a rental property, we always do require the minimum 20% down. Some lenders, like I just talked about, calculate how many doors versus how many properties. And we talked about the add backs versus offsets, and subject property versus non-subject property. So, maybe we coach them into buying another property and turning their old one into a rental, right? So we just want to make sure that we're doing, again, that forward planning with their clients to ensure they understand their options as they're doing their tax prep as well. So we talked about a lot of programs, so I just kind of touch quickly on what the down payments are, just kind of bullet point. So we do have the option to do the minimum 5% down when somebody's purchasing an owner occupied residence. And then the rules change. I kind of go through how the rules change when they're purchasing a price above 500K up to $1 million. So we, as mortgage brokers, may know that is 5% on the first 500K and 10% on the remainder. That's a common misconception in our world, because clients often just think of 5%, right? So that could be a little bit of a sticker shock when they find out it's a little bit more when their purchase price is 800, let's say. We can obviously help them with second homes and vacation homes, depending on the program. So 10% down is required for stated income program, 20% down required for rental properties. And I didn't put it in here, but also alternative would be a great thing to add if you bought the slides. And vacant lots, I'm sure, as you guys know, as brokers, are really tough to do, but can be anywhere, between 20 and 60% loan to value if you do have a lender you can go to. But it is a little bit tougher in the broker channel. I just do a quick did you know here that you can put 5% down even if you're not a first-time home buyer, because a lot of people think when they go to purchase their next home, they have to put 20%. But we all know if they're purchasing a primary residence that they could take advantage of that again, but pay the default insurance. So just a quick recap on down payments. Here is just for you to add your name. Perhaps you're presenting with a team member. Maybe you've teamed up with a local real estate agent, would be a great way to present to an accountant or a lawyer or something like that you can team up. That's always great. So just again, touching on some of the programs, first-time home buyers, second homes, rental properties, we can refinance and help consolidate debt. It is tricky when we're trying to consolidate CRA debt, but not impossible. So that's something we definitely can try to help with. Self-employed mortgage solutions that we just went through, the high net worth equity lenders, Bruised Credit, which is our alternative programs, and obviously a lot more. We've got access, as brokers, we've got access to hundreds of programs and policies, right? So again, just kind of go through your company details, anything else you'd like to go through there. VIP access, and you can change this slide if you want, but what I kind of just say is, like, during tax season, and Adil can attest to this working with Luke and I, like, feel free to call us whenever you want. Like, you're our VIP for the season, you're working with your clients, call us, we'll drop what we're doing and do that 2-year average. We'll do purchase reports if that's what your client needs. We'll just basically help educate them. I spent a lot of the time even just on the phone with some of Adil's clients that talking about 2 years away. And of course it seems like a long time for a broker, but helping educate these clients, the payback is, you can't even measure it, because they all of a sudden send their sister who's not even self-employed. So that's an easy deal, or whatever that may be. So always take the time. And then if you're going to partner with an accountant who's busy during the tax season, make sure you're available to help them, because that's half the battle. We kind of went through companies. So then feedback time, basically here, what I would suggest doing is putting some Google reviews. If you're a new agent, you can maybe put some Google reviews for the company you work with or the team you're a part of as well, or delete the slide altogether. But what I suggest here is putting in something that relates to the accountant. So yeah, first-time home buyers are great and stuff like that. But if you can throw in some self-employed ones there, that would be great. A high net worth one, or debt consolidation, something that the accountant would be like, oh, I've seen this scenario before, right? So then it really relates to them. And then of course your contact details. So that's kind of a quick overview of what the presentation is. Again, our goal is always to get to the point of presentation, but it may not happen right away. So go through the slides, edit them to, it's all Canva based if you did purchase it, edit them to match, your style and your logos and your brand, so that you are ready when the time comes. But generally this is kind of the steps, the next few slides are the steps I've personally used to find referral partners, not even just accountants, other ones as well. So basically start on Google. So Google, I would just kind of, I'm in Kamloops, same as Adil. So I would just Google local accountants, and I would see, who's in the area. If any of them are familiar, if I know any of them, that's obviously where I would start. Review their websites to ensure that they do tax planning and business planning. Not all accountants are working with self-employed buyers. I'm sure Adil can attest to that, right? Different accountants, just like us, have different, things that they specialize in. So you do want to ensure that it's something you can help with. Otherwise, it's a waste of your time and theirs if you're visiting, right? And then I'm a big spreadsheet person. So once you get this information from Google, you're going to create a spreadsheet. You're going to note down their first name, their last name, their credentials, because you want to have something like if they've got their CPA, it's definitely something you should touch on. That's a big accomplishment, right? So you've got your CPA, you'll put down the office address, email, phone number, and a notes section. And the reason I say the office address and all the other ones is, so I prefer to meet people in person, but the world is changing. A lot of people are doing Loom videos and that kind of stuff as well. So definitely reach out whichever way you prefer. But it is best, Adil and I met in a networking group, and I do believe we connected a lot better meeting in person, realizing that we would be a good team, rather than if I had just emailed him. He can attest to this, but it may not have been as good as a relationship moving forward. People, especially in the accountant's case, this is their business. These are their clients. They want to send them to people that they know and they feel they can trust. So I do believe that this relationship deserves the time to be nurtured in person. But again, depending on your business goals and plans or the reach you're trying to achieve, then you may want to do Loom videos or whatever you're doing at the time. The notes section is always good just for follow-up, because I popped into Adil's office on January 15th and then no reply, or yes, he replied, or yes, we have a coffee, or something they told you about, so that next time you can kind of remember and have some good conversations as well. So I do really like having notes in everything that we do, so that you can be productive the next time that you speak to your accountant. Another thing I didn't put in here, but I should have, is also having a list of the clients they do send you once you get to that point, because you want to really keep your accountant or any referral partner informed. So whether the lead went nowhere or you got in touch with them or whatever that may be, maybe make a spreadsheet where you can reach out to them every 2 weeks or once a month and say, hey, Dale, thank you so much for the leads. Here's bullet points of where things are at, because they want to know their clients are being taken care of. The next steps. So now you've got your list, and I joke and say you've checked it twice, but now what? Like, what do you do with this list? So like I said, I'm big on the drop-ins. I did last year because Adil really liked, we made these pamphlets for self-employed clients that he could pass out at tax season. So then I thought I should offer this to more accountants, and I mailed them and I didn't get really any response. So I do believe that the relationship is best in person to be developed, but you can email, call, or text. Again, that's up to you, but you definitely want to try multiple points of contact multiple times if you can. And if it doesn't work out and they're not replying, then that relationship, don't take it to heart. It's just not meant to be, and you'll find somebody else to work with in the future. Again, I say try to land an in-person meeting or at least a video call. You want to connect with this new referral partner so that you can introduce and again, show your value, show your pitch. If you can get to the point of presentation, then that's like the ultimate goal. Maybe you can present to the accountant themselves or their team or whatever that may be. But if not, I do recommend leaving a brochure. Sorry, you can hear my dog. So leaving a brochure. I've got like hundreds of brochures that I kind of print. Here, 1 second here.
Sarah,
I think she just stepped away to deal with the dog.
oh, okay.
Those brochures are a good idea, though. When she gave them to me, I think within a month I was already out of them, because it's just really easy to hand to clients, hey, if you're looking to buy a house, talk to these guys. So yeah, those work really well.
Thanks for the feedback, Adil. Yeah, I think that they're big, they're bulky. It's something that they can give their clients that provides value. It's not dedicated to the accountant, it's for their clients. And that's always the goal with like any brochures. And you can ask my husband, we have got brochures all over our house. So I'm a big believer in brochures. But so you want to leave something behind. And I often think that it shouldn't be your business card, because your business card, personally, I tend to throw out business cards a lot. I try to keep them for referral purposes, but you know, this is a lot bigger and bulkier. It's got a lot of contact info. It's going to sit on a desk. It's going to sit at the front desk. I do kind of believe in that. So leave something behind. And then after that, we kind of move into the follow-up steps. So in our business, we are lucky enough we can work with multiple. I'll go through that at the end, Kiki, but yes, I do have the brochures available for sale. The follow-up schedule, we're lucky enough to work with multiple partners in our industry, and they all kind of have a cycle. Of course, we all work year-round, but our partnerships kind of cycle. So what's awesome about working with accountants is they kind of, in this first quarter and second quarter of the year, this first quarter, we can obviously be meeting with accountants, but by the time, and Adil can attest to this, like when do you start getting busy where you don't want us to call you or talk to you anymore, Adil?
No, like I always try to get, sometimes I'm bad at getting back to you. So it'd be like, I have a client for you, then you need some information. Lucas messaged me twice. I'm like, oh crap. Like, so when we're busy, I'm just trying to make sure I can send you the stuff you need. So,
but I mean, more like
yeah.
when does the, like your tax season start where you're just like, it's tax season. Like, I don't have time for like partnership meetings. Do you know what I mean?
So at the busyness, like March and April, those 2 months are like so usually like March, not as bad. April's like the worst. It's
there you go. So
yeah.
So you want to avoid, as a mortgage broker, approaching an accountant during March and April, because they won't, you know, they may be nice, like Adil, and take the time to talk to you, but they're too busy. They're working with their clients. It's crazy. They work endless hours. So that is not the time to approach accountants. Right now is, and in the last quarter of the year. So as you can see here, I've got reaching out to accountants in kind of the early first quarter. We want to hit them. I kind of thought closer to like I would probably stop pitching around February, because I would imagine your clients are starting to reach out. You're probably starting to gather documents, offer advice. So we don't want to overlap where they're getting too busy and be pitching.
One quick thing I will say is for self-employed, especially if you have your own corporation, is you have until February 28th to do T5s for dividends that you pay yourself. So in February is like the biggest time for us to kind of work with like Sarah and Lucas to kind of say, hey, well, how much should we pay them, or how much should they show this year? So I'll be dealing with you guys a lot in February because of that.
Yeah. So again, like, so trying to hit them before February, then I would say would be your goal. So you've got a couple weeks left to really hit the accountant referral network hard before they get too busy. But it is the perfect time because they're just about to enter that. So they'll see the value, like, okay, before, like Adil said, T5s by the end of February, lock that in your brain. And when you go and approach an accountant, now you can say that before you guys start putting in the T5s and locking that in and like writing that in stone. I'd love to help you and provide value to your clients by offering a free 2-year average review, what they should be claiming for their T5s versus not, based on their goals, right? Because that will change. So then the teamwork really starts, as we kind of said, in February. Adil was saying is kind of when they'll start reaching out for advice for themselves and their clients before things really start to progress and they start writing their taxes in stone. So this is kind of teamwork stage. And then Adil, when would you say tax season's done and you're celebrating with a couple of years?
So June 15th, because self-employed, their deadline's June 15th. Like the actual deadline for everyone else is April 30th, but self-employed get till June 15th. So June 16th is the big day. Yeah.
June 16th. So that's when the celebration begins. So definitely kind of, so we talked about February. So now to like middle of June being that celebration, or like, sorry, the teamwork and then celebration. Of course, definitely your accountant deserves a couple drinks after that. So maybe you guys go out for a meeting once it's all done. So stay in touch after that happens. Obviously, accountants are still busy throughout the whole year. Everybody's year ends are different. But this is for us as mortgage brokers. This is really when we enter into working with our real estate partners anyway. So that's when I talk about cycles, right? So in the fall is when we kind of cycle into working with our financial planners when they're doing their annual reviews. Many of you were on the call when we did the financial planner training as well.
Sarah, this is Brenda. Can I ask a question as well?
Yeah, sure.
Sorry, I actually end up signing up late. I apologize. I hope this is recorded.
It is, yeah.
Okay, thank you. So now I just want to ask you, at what stage are you actually presenting this webinar to the accountant? Like when you first time calling them and talking to them, they agree to kind of either meeting with us or do Zoom. Is this the time that you actually share your screen and then go through this with them?
Yeah, so sorry, you probably did miss the earlier
Oh, I'm
slides.
so sorry. If I did, don't worry about it. I'll watch it again.
That's okay. I'll quickly touch on it, but basically what we're looking for is like the presentations are end goal, not always the starting point. So you want to either go out for coffee, meet your accountant in a networking group, or you've reached out a couple times where you can connect. But then after that, the end goal, I would say, is the presentation once you've developed something for sure. So in the meantime, you can drop off brochures or do something. But yeah, it is definitely takes a bit, because you're taking the accountant's time. So you want to make sure you've developed something at that point. You may get a lot of no's before you actually hear a yes before you can present in person.
Fair enough.
Yeah, so the start planning for next year, I would say to basically kind of start prepping your presentation, altering this one, or just, you know, some new marketing material for the following year when you're really gonna, you know, last quarter and then you're in the new year right now, you'd be kind of networking again. So here we are, full circle, right?
Got you.
So,
awesome. Thank you so much.
no problem. We'll go through the rest of the questions at the end here, and then because Adil's going to show us a couple slides as well and share his screen. So now we're jumping into Adil's side of the presentation. So Adil, I'll let you take over. If you feel you need to share your screen, you can just steal it away. And then if you want me to pipe in on any of the programs, you're more than welcome to. So
yeah, so I have a lot, just to kind of touch on what Sarah's been talking about. With my clients is I'll meet with them and they'll so they have no clue when they become self-employed. They're not thinking, oh, how does this affect my buying power? Like until they start talking. So when I meet with them, I'll say, hey, are you guys looking to buy a property? Or are you guys thinking of it? And like, yeah, like I think by next year, maybe in a couple of years. So what works really well is, and I don't even know if Sarah knows this, when I first was trying to get in touch with mortgage brokers, I was talking to a couple other ones, but I'd put them in touch with my client and it'd be client didn't get back to them for a couple of weeks, or there's something different reasons. But one thing that Sarah and Lucas do really well is, I think it's always within a day or two, they have like a spiel that they send. So I'll send them an email, introduce them to a client, and then within a day or two, they're back at them. It's like, hey, can you please fill out this form and give us your information? So they've at least touched base within like, I don't know if you have a set goal, Sarah, but it's always really fast.
We don't have a goal, but we try to be quick.
Yeah, so,
most people know if you don't talk to a lead right away, you tend to lose it, right? So
yeah, so then I think the first one that we did was someone that we, as soon as they got their house, they came back to me and said, Sarah and Lucas are awesome, like they're really good, and they had already talked to a couple other brokers. So then that's when I kind of knew, like, okay, this is going to be a good kind of relationship. But one thing that was super important is they were able to get back to them in a timely manner. So that'd be something that if you guys are working with accountants and they have a client that may be looking, the thing is, it's not always like, Sarah can test this. Sometimes I'll give them a client that's buying a house this year. Sometimes it's someone tells me they're 2 years out to wanting to buy a property. So I said, you got to start thinking about this because they're going to be looking at your previous tax returns. The next slide kind of talks about this, about what your income should be, but I'd say it's best to start talking to them right now so they can start building leads years in advance. So and those people, they appreciate it, so they're not looking anywhere else once you touch base with them. So the forward planning thing is huge. So not a lot of accountants are big on, like, they're more like previous planning, like, hey, this is what your numbers were, this is what your taxes will be. So then they work on getting you the least amount of income so you can save the most amount of money on taxes. So, and that's what I do like every other time, unless they're trying to buy a property. So when they're trying to buy a property, I say, hey, let's come up with a number that won't kind of screw you over when you're trying to get your house. So that's where working with a mortgage broker is huge. So because if I bring their numbers down super low, and lots of accountants do that. I've worked with clients that were showing like a loss or showing something and they're trying to get a property. I'm like, I don't know how to help you here. So we have to start. So they don't know, they just trust their accountants. So that's one thing you can kind of talk to the accountants about when you speak with them, is you can provide that kind of income planning with them, so they know how to help their clients. And then the other thing, like, educate clients. It's just that they're not sure what, but like until I talk to them, because they'll probably come to us accountants before they come to you because they have to get their taxes done. So then that's when we can get them thinking about, hey, if you are looking to buy a property, have you thought of talking to mortgage broker? Like, we'll just wait till like when we're ready to buy. I was like, it doesn't really work like that, because when you're ready to buy, your income might not be there. So educating clients, I think that's kind of where our partnership kind of works the best, is together the both of us can educate the client. So then they're like super pumped, because they're planning it years in advance. So, but when the time comes, it's easier for you guys to get them approved. So you don't have to give them bad news when they come to see you. I can't get you approved because your numbers aren't there. So pre-planning is huge.
I have to agree with that for sure.
So so the claiming income versus saving tax. So all of us accountants were trained to, let's save our clients the most amount of tax. So that's why I said like 90% of the time, this is what we're doing. We're getting as many write-offs as we can, to the point where I think this would be the only option. Like the only way I wouldn't get them all the way down is if they're trying to buy a property, because we can come up with ways to find more write-offs, find more deductions, and get you. But if it's going to show you around like $10,000 in income, and your revenues is over like 100,000, so then it's not going to help you when you're trying to get a place. So what we did, there's actually one of the first clients we had with Sarah and Lucas. I think that they showed like a good amount of income, and then this year, because they already got in their house, we're getting them down to like under 40 grand, because they took out a lot of income to get approved for their mortgage. So now this year we're back to saving them money on taxes. So it's just kind of and not people will know, I'll go over them. Like, you might pay a couple $1,000s more this year in taxes, but you're going to be able to get your house. So that's kind of like the choice you have to make. So that's where claiming income for saving tax kind of comes down to. And technically you're supposed to like claim your proper income, but you'll never change their actual revenue number. But if it's, hey, let's write off less of our meals this year or something like that, the government's not going to come after you for paying them more. So it's usually they want to come after you they're coming after you for the opposite way. So if you're giving them a couple extra $1,000 because you didn't write off all your expenses, then your income looks good, and you can get approved without having to worry about it. So that's one thing where if it's not too hard to pitch that to clients on my side.
Yeah, and it could vary. Like Adil said, not all accountants will be doing as much forward planning as he does, or perhaps after you guys have the opportunity to partner with them, you can obviously educate them on the benefits of both sides, claiming income or versus saving tax, because we do have the option if they don't want to claim income, because that's one of the benefits of being self-employed, is having some of those tax write-offs. We'll then explain to them the alternative lending and the private lending, right? So we do still have options, but perhaps there's a way to get them in, like Adil said, traditional or stated income financing. And then in the future, they can stick with their A-type lender for years to come and just claim less income in the years to follow. So again, it comes to forward planning and what the client and the accountant's appetite is on the subject, because it'll vary greatly between
and it's always you never want to touch your top line revenue number, because that's something that you have to report. It's like mandatory, you have to report that. But it's your expenses are what you like. Some people just don't keep receipts sometimes and they miss it anyway, so that's something where we can kind of have more planning around. So
I call them fluffy expenses, like
Yeah.
the ones we use to kind of bring our incomes down, because we use that in our stated income program, right? When we're trying to figure out a number between stated and gross income, we kind of take the net and add back those fluffy expenses, I call them, to figure out what that stated income might look like. So again, yeah, there's benefits to all our programs. So it's just ensuring if the client doesn't want to claim as much income this year, you can be like, that's fine. We have access to alternative, but just understand there's this fee and higher rates, shorter terms, and that kind of stuff. So it's all about educating. And they're like, oh, I don't like that. Okay, well, let's come up with a plan for traditional financing, right? So
Yeah, for sure. So collecting your 2022 tax documents. So I'm assuming everyone on this call is self-employed. So I'm not sure if you're new or have been doing this for a while, but there's quite a few things you need to keep track of. So I'm going to quickly kind of touch base on that. And that this is where I kind of I'll share my screen quickly and just kind of go over some of the most basic expenses you can deduct. But like one of the main things just to kind of remember is the general rule for deducting an expense or write-off is it's any expense you incur that can potentially lead to you earning income. So it's really vague. You got to be able to justify that, hey, I spent this with the hopes of generating income for my business. So if there's no justification at all that you can come up with, or it's really stretching it, then most likely the government will deny it. But if you can have some sort of justification for this is what I was planning to do, then you're able to write it off. Because lots of startup businesses too, they lose money in the first year, so they're spending more than they're earning. But as long as they're spending it in the hopes of earning income, you can definitely write it off. So I'm just going to show you. These are kind of the most these are kind of the most common expenses you'll see, and it's a template that I give to clients just that are self-employed. So can everyone see this?
yeah.
Yeah, so obviously advertising, anything you spend, you guys talked to Sarah about doing brochures, things like that. Those are all costs like they're helping with their business. Meals and entertainment is one that maybe everyone kind of knows about, but they only figure out how it works. So this is anything like if me and Sarah to go for lunch, or if you were to take a potential prospect to like a hockey game or anything like that, as long as it's to do with a business purpose at the end of the day, then you can claim it, but you only get to claim 50% of it because you're getting some sort of meal or entertainment out of it. But bad debt, you probably won't have to deal with this. That's just people not paying your invoices. Any insurance you have, interest in any loans or bank charges, your business license, any membership or groups you're part of, office expenses. I'll touch on that because I'm assuming lots of you might work from home. So there's a bit more you can write off if you work from home. Any supplies you have to buy for your business. That could be as much as like your laptop, things like that, furniture. You can probably get a few things in there. Any money you pay to accountants and lawyers, you can claim for your business. And if you have any, I'm not sure if you have any equipment or anything like that, but if there are any repairs on that, you can claim it. If you have any assistants or any people that you employ, you can definitely claim their salaries. Travel's a big thing because you guys are talking about some conference in Toronto at the beginning. So that's something you can touch base on, because anything you spend there, and if you're staying overnight in your hotel, your meals, your conference tickets, like things like that, if you drive there or fly there, your travel claims. So that's definitely all deductible because you're going there to educate yourself for a business purpose. So that's something you can write off. And then telephone, definitely your cell phone. And then I'll go a little bit more in on, because vehicle and home office it's kind of like a whole nother game because there's a bit more to it. So if you work from home, you pretty much just have to know like the square footage of your workspace and the square footage of your house. Once you have those in, whatever percentage it is, usually it's around like 15 to 20%. But you have to, once you have that percentage, you can claim like pretty much a list of all these different expenses for your house. So that's something that if you're, because I'm assuming all of you guys are commission-based employees or self-employed, so all of this would apply. And these are templates I send to pretty much all my self-employed clients. So you guys can ask me for it and I can send it to you, or I can give it to Sarah and she could send it to you as well. Motor vehicle is kind of similar. You have to keep track of these things. Your business kilometers they're driven for the whole year, then your kilometers driven for business purposes. Usually depends on how much you use your vehicle for business, but say it's 50% of the time, then you claim 50% of all your these costs like fuel, interest, insurance, license registration, maintenance, pretty much anything for your vehicle. So these ones I just went over, I'll stop sharing now, but those expenses are just they're not everything you can claim, but they're the most general ones that you see amongst all different business owners. Then there's a whole big category called other, which is just like I said at the beginning, any other expense you earn that could be helping you with your business. So that's just kind of the gist of that I wanted to talk to you guys about, just for your own personal taxes. And then I think the next was just kind of what to prepare for. Mm-hmm. So what for preparation, I would say if you don't have a good way of tracking your receipts and your expenses, it's good to get a bookkeeper or just start talking to an accountant about a template or something you can use, because if you lots of times if you miss something or you didn't keep track of something, you don't have it, then you can't claim it. So then that's just money you're leaving on the table. So until you kind of start becoming self-employed and realizing that, or some people wait till they have their first tax return and they owe a lot of money. Oh crap, what can I do? So it's first thing, most important, you can save money by tracking all your expenses right off the top and having like an organized way of doing it. And if it's really hard, if you don't have the time, if you're busy, then I just recommend getting a bookkeeper. They can range anywhere from $40 an hour to some of them are up to $70 an hour now. But if you don't have a ton of it, it might only take them 1 hour. So it might be $40 a month. So it might not be a huge expense for you, but it's definitely going to help you save a lot of money. And it's a write-off too, so you'll get a portion of that back. The sole proprietor versus incorporation, this is something that it varies from when I recommend to do it. And it will change from different province to province, and there's different thresholds as far as tax rates. But once you're kind of, when people get into that at 40% tax bracket, somewhere around there, that's when I start recommending them to think about it. So if you're higher, because when in all provinces, it's pretty much the same, where it's going to be 11 to 12% tax you pay if you're incorporated on operating income. So you can go, if you're paying 40% tax, or higher, you can go up to like 54% in just as a sole proprietor. Then that's where we can start talking about, okay, how can we save you money by incorporating? Because if you incorporate, your income is going to be taxed at 10 or 11%, and then maybe you pay yourself out in a lower tax bracket. So if you're going to make, I don't know, 300,000 and pay yourself 300,000, then you're not saving anything by incorporating, because you're still hitting these high tax brackets. You can technically save more if you're making a lot and you can pay yourself less. So I got lots, like on average, lots of the self-employed people I work with that are incorporated, they'll incorporate if they're making, let's say over 100,000, and then they start paying themselves at least somewhere 40 to 80,000 a year just for their personal expenses. Everything else goes to the company. But yeah, the good number for all these, once you get over 100, is when you maybe start talking to an accountant about planning, and then what I do is run numbers for clients to see, this is how much you could save if you did do this. So it's just something that once you get to that number, you can kind of start talking to your accountant about what makes sense and how much could you save, because there is a cost of doing this. Like it'll probably cost you $2,000 to $3,000 a year just to run an incorporated company. So if I can save you more than that, that's when I start recommending it. So if I can save you $10,000 a year in taxes by incorporating, then you're after you pay your fees for incorporating and everything, then you're still on top. So that's where it comes down. So that's not really it's not really like a good answer I can give everyone, but it's just if you get over that threshold, maybe it's a good time to start talking to your accountant to see if it makes sense for you.
Perfect. And also, sorry, for those in BC, just so you know, there is a BC FSA regulation. We can incorporate our commission and pay ourselves commissions to our corp until 2 years with no compliance issues. But I don't believe, and for those on the call, you who are out of BC may be able to attest that I think you guys can incorporate almost right away. If there's tax savings there, like Adil said, if it makes sense. For myself, I came from the bank. I already had a book of business. I kind of knew what my sales were going to be. So I wanted to incorporate right away. And the company I was working for was like, yeah, you can. So I created a corporation and got everything ready. And BCFSA was like, nope, you got to wait two years. And because I worked for the bank, I had let my license lapse. So my 2 years kind of was like starting over. So just keep that in mind. It may be based on your governing body. So BCFSA or FSRA or RICA or whoever it is that, your provincial guidelines, definitely before you even start the corporation, look into that because it could be costly for you without even knowing you could do it or not.
And can I just touch on, I saw that there's a question here from Kiki Berg about the conference. It just says, if your conference is out of country, and then you can't write it off if it's in the same country. Like example of a mortgage conference in Mexico. So the only difference is if you're traveling out of country, say Mexico, then you get your airfare, your hotel, things like that. If you're going to like a conference that's like a block away, again, if you like got a hotel room and things like that, it'd be hard to justify that. I had to get that in order to do this. So it's everything else is the same. Like you still do your meals, you can still do things like that for the conference. It's just that you won't have the same travel expenses, but the conference fees, everything's still deductible.
Another thing, sorry, we didn't really touch on really, but something to think of too, as self-employed individuals, most of us don't have access to health benefits anymore. So I've reached out to Adil a couple times, like, hey, we had to go to Vancouver, which is about 4 hours away from us. And I was like, is this considered a write-off? And he gave me exactly what, yes, it is if this, this, and this, or no, it's not if this and this. So that's another thing to think of too, is keeping your receipts for certain medical expenses, because those can be considered write-offs. I'm not a pro on that. Adil is.
Any medical if it's required to be out of town or somewhere outside of your city that you're in, then you can claim all your travel costs for you and your family. So it's not just for you. So if you go down with husband and kids and things like that, or because you can claim everyone's travel, their meals, their hotel rooms, just for a medical trip that's outside of the city you live in. So that's something else to think about. There's a lot of things. So if you guys have questions, please feel free to email me. Email will probably be the best way. Then I can get back to you. I'm still working on setting everything up for the new firm. But if you email me, I can definitely get back to you and answer any questions you have for you or your clients.
Yeah, definitely. It's just a whole new world for most of us, right? The taxes especially, and understanding your own taxes will only benefit you with helping your clients as well when they're looking at doing that transition from sole proprietor to incorporated or whatever that looks like. So you'll notice if you're new to the industry, these next few years of doing your own taxes, you'll be like, oh, this is what, oh.
Maybe I should touch base on one more thing with you, just because you already touched base on it, Sarah, with having the operating company and the holding company. So like I just mentioned, and it's going to be your taxes you pay in the operating company is going to be at 11 or 12%. So let's say you made 100,000, you pay 11% taxes, you have $89,000 left. If you owned it personally, you're probably paying like $30,000. So you have $70,000 left after tax. So what a lot of clients do is they incorporate, say they have 100,000, they pay 11,000 in tax. They move that excess money to the holding company. Now they have more capital for down payments on property, things like that. So you'll see a lot of companies or a lot of people that have a holding company, they'll want to invest in that holding company because they'll have a lot more. They haven't paid personal taxes on that money yet. They've only paid taxes on 11%. So they have a lot more money to put down. So you'll see if you have people that are thinking about incorporating their business or have an incorporated business, trying to figure out how to get property, then that's definitely worth, knowing how they can do that without having to pull the money out of the company and paying a lot of tax on it. So
exactly,
yeah.
So this is Adil's contact info. If you want to jot it down, Adil, you might want to just put it in the chat as well. So if people want to copy and paste it, Adil can help clients across Canada. He does very often because we've worked with some of his clients. So if you're looking for advice or you're looking for an accountant, some of the people on my team have actually recently reached out to him because I'm very obviously open about the importance of growth with your business and having projections, what this is going to look like. You may be starting as sole proprietor, but you're going to be moving to incorporation, which is hopefully some of your goals as your incomes grow. But in the one case of one of the agents on our team, it was about income tax splitting for her and her husband. So, there's many different reasons to have a good accountant on your side. One that, like Adil, is very educating and informative because some accountants, they're very black and white. I've worked with a few in the past, personally and through my clients, and I'm like, you pay what per year? or they just aren't getting the advice that they need. Like the one client I had claimed 0 income one year, and the previous year was 230, and I was like, so I literally called the accountant. I'm like, what's going on here? What was the reasoning? Because obviously there was a reason. He had changed interprovincially his business, but anyways, we shopped everywhere to get this guy a mortgage. And because I said that $0, he claimed this was in 2021, is going to follow him around now until 2024 taxes are done. So we tried like some of the major banks for exceptions, because obviously this wasn't traditional. We had a trajectory of previous years. They wouldn't touch it, all sorts of reasons. So it was, and he didn't want to go alternative, the client. So it really did just kind of affect the client without him fully understanding. He trusted in his accountant for this decision and didn't realize the long-term effects. Whereas I had helped this client purchase multiple properties. And if the accountant would have noticed that on the tax returns, you know, these multiple rentals, well, maybe it's not something you're going to claim 0 for 1 year. So having somebody that does believe in forward growth is not going to only help you, but like your clients, everybody, right? So definitely look for that in an accountant. If you don't have one, you can definitely reach out to Adele. For myself, my Broker Pro, most of you are familiar with on the call, is our marketing company. So if you do need help with any of that, marketing or any other business development, growth, anything like that, we're obviously free to connect with. And we've got some free services and paid services. So we do a lot of these webinars and that kind of stuff for free as well. So I work with agents literally across Canada. It's been pretty amazing. So feel free to reach out to me as well and my team. So I'll start by going through some of the questions in the chat, because these agents have been waiting a while, and then we'll open it up. And if anybody wants to ask a question as well, you're more than welcome. And for those of you who want to jump off, this is the end of the presentation unless you have a question. So a couple good just feedback comments. A lot of people going to broker talks, which is so exciting. PITR is a personal income tax return. Nisha replied below. And yeah, T1 general basically is what my understanding is of it. I would think Adele agrees.
Yeah, it's just your tax return. So
yeah.
A lot of people, like some clients, are like, give me my T1 general. I was like, that's the same thing as the tax return I sent you. So it's just a copy of your tax return is what you guys need. Yeah.
I'm going to remove this slide here. Okay, and then Jaden's on our team, and he says TD's high net worth programs recently been revamped in a big way. So not sure if this is translated to the broker channel. Jaden actually joined our mortgage tech, our mortgage company from TD. So he's got a lot of knowledge based on their policies and programs, which has been awesome. And I do remember we're very close with our BDM, our TD BDM, because we use them quite a bit, and she's amazing. And so she did mention to us that it was going to be changing, and I was quite sad about that, because right now I really like their program, but if they change for dollar, they'll be kind of similar to everybody else. But regardless, that's part of our job, is to shop around and find the best program for our clients. So Scotia's got a great high net worth, some of the alt lenders do too, so definitely lots of options there. How big is the brochure? Trifold or like multiple pages? It's just a standard trifold. This one's not the accounting one. This one's my retirement one, so it's more for financial planners. But it's 3 pages, and then it has a front and a back. I print them from Canva. If anybody is looking for like where to print them, Canva through the back, you know, like the scenes is connected to Staples. So if you have a local Staples, like I can order these on Monday, like high gloss, beautiful finish, as you can see, and pick them up by like Tuesday, Wednesday. They also deliver as well. So if they deliver, you'll just get like a nice, fun, fancy Canva box. And they're a lot cheaper than what I've found for like Vistaprint and stuff like that. The brochures from us, can you buy them? Yeah, so you would just go to, I'll put it in the chat, but mybrokerpro.ca/shop is kind of where we sell any of our templates. So a lot of them, again, as a professional, it's your due diligence to go through the template or the presentation or whatever it is you're purchasing to ensure it meets your provincial guidelines. But for the most part, all the verbiage is there. So like, you know, pre-retirement, it's all pre-written for you. So if you are a new agent, it's really great. But if you're a experienced agent and you want to change, you know, this is alternative lending, perhaps you want to change the wording to something that you prefer to work with. But for the most part, it's all things that I've personally used in my business. and like the presentations I've done to accountants, I've done to financial planners, I've done to realtors. So you definitely, it's all there done for you, but you have the option, because it's through Canva, to edit it. And I do strongly recommend that based on your area or the programs and policies you prefer. How do I get a copy of the presentation slide? So you can purchase the accountant presentation or any other ones, financial planners, realtors, that we have on mybrokerpro.ca/shop. I just put it in the chat. But this one itself, from Adil and I don't typically send out. I can, but it's basically just mimicking the presentation that we have for sale. So I probably wouldn't send it out for free. The presentation templates are very cheap. They're only like 35 bucks. So would you be showing this a more simplified slide discussing how and when you would engage the accountant regarding quarters as well? Yeah, kind of to touch back on the slide where we talked about the cycle of it, I would probably in the fall of the previous year, like that's just passed, would be preparing, make sure in your presentation you have your pamphlets, that kind of stuff. And then I believe in personally just like small outreaches. So like, hey, like Adil and I were fortunate enough to meet in person, and that was the best way. So if you can join a networking group or meet your accountants in person, it's strongly recommended. But if you're going to go like the cold call route or emails or something like that, keep it short and simple. Try avoid being like, hi, my name is Sarah, I've been a mortgage broker for X amount of years, this is my, like, they're not going to read that email, I don't think. So just
there's certain accounts you want to reach out to too, because like, of course, there's lots of different accounts out there. You want to deal with an account that's the one that's providing advice to clients. So some accounts can be lower up there, but you might look for, if you're looking at a bigger firm, look for someone that's a partner or senior manager there that's directly working with clients. If you're working with someone that doesn't really provide advice to clients, and they're not going to really get much out of it. And then the other thing to kind of look at is just kind of telling the benefits of what you can do, to say, I can provide your clients with estimates of what they need to show to get approved for houses. And it doesn't cost them anything. It's just for me, all I do is send an email to Sarah and Lucas, and it doesn't take much of my time or anything like that, but it helps the client. And so if they can kind of figure that out, because lots of accounts don't do this that often, but they can. And so if you kind of show them the way, they'll definitely help you out.
Yeah, and even just like, Adil naturally does it because that's his business model. But if you are working with an accountant who doesn't, maybe it is just informing them, like perhaps just ask that question every time you're working with your client, right? So it's all part of the conversation. So as far as the cycle goes, it will vary, obviously, what you're checking in on. We kind of talked about, the first quarter being trying to engage and create that partnership. Second quarter would be a lot of like just working together back and forth, like Adil said, a quick email to whoever, and then us reaching out to the client, providing speedy advice, and just being there at their disposal during this time, because that's the benefit of partnering with an accountant during this time. And Adil doesn't know this, but for us as mortgage brokers, the last few years have been crazy, obviously, but traditionally this is more what it feels like. A lot of us feel slower right now, right? We're not seeing as many leads coming in. Well, if you partner with an accountant in February, March, April, you'll see that shift really change before you start working with your realtors. So it's important to have different partners that can fill those cycles as a broker. And then, for example, like when people were complaining about the industry having a dip, my husband took over all of our underwriting. He didn't see a blip of a difference with his business because he has different cycles of, it's not just realtors sending him business. It's a large chunk. I keep track. It's 56% of our business comes from realtors. But, that downsize, when we started to see the really high increase in interest rates, we started to see more of our financial planners sending deals, consolidations, that kind of stuff. And now we're going to go into the cycle of working with accountants. So you definitely want to broaden your referral partners, not to just be realtors. Would you also note You have to have the same 2 years. T5 for 2 years, can't mix and match usually. Kiki talked about T5s being the same for 2 years. You can't mix and match usually. The very lender dependent for sure. I have seen some exemptions from this if it's a strategic, you know, business move as well. So again, it depends on the lender you're using, but we often do see people transition from T4s to T5s for different tax reasons. Adil can touch on that why. I don't even really know. But
For most business owners, the T5s are easier. So T4s, you got to set yourself on payroll. You got to do monthly remittances to the government, CPP, EI. Lots of business owners, they're busy running their business. They'd rather just take money out when they need it. So T5s are super. It's just you take draws out as you need the money, and then at the end of the year, by the end of February, we do a tax slip for you to determine how much we're going to claim as income. So it's super convenient. It's a bit less taxes too, but it really depends on because the biggest downfall is you don't get build up that RRSP contribution room if you do a T5. So if most business owners that they're like, okay, I'm good just with my room right now, then they'll go on T5s. So that's kind of why I see most people do it, just because it's super convenient for them.
Yeah, fair enough. That's probably what we were going to do. So, so yeah, I do agree with what Kiki's saying, that some of the lenders do want to see that consistency in the 2 years for the T5s or the T4s for the self-employed person. But I have seen some exceptions for that if needed, where you can really explain, like if you have a T4 and a T5 for the next year and you're showing that growth from the company, like Adil said, they're now starting to pay salaries and the total income's not really changing. It's just like the structure of how they're paying themselves. I have seen an exception, but you know, obviously not as standard or as easy for us to just use the same T1 or T4. Prabha says Scotia has the greatest high net worth program. They do have an excellent program for sure. My husband and I are super excited. We just got access to Manulife's all their programs too. So we're pretty stoked about that because we didn't have that when we were at the other company. So we're excited because they have a good one. Do you have a done for, Prabha asked, done for you webinar? Yeah, so the one I presented, you can purchase on the website for $35 and it is done for you. Again, recommended to edit to whatever province you're in or programs that you use. Jessie says, thank you. Jessie's part of the BRX team. You're welcome, Jessie. Kiki for Adil. New OFC rules this summer might move to GDS 32. Watch for that. Big change for income. Okay, yeah. So basically, she's talking about how the debt ratios may get tighter to 32 and 42. So that will obviously affect, you know, depending on how much income people claim going forward.
I refer to Sarah and Lucas for that. So
I was going to say not so much for Adil, but
no, if anyone tells me anything that they're trying to buy a property, I'd say, hey, look, like let's talk to them first, and then me and you can kind of strategize after that, so we know where to be at. So I don't try to do any type of planning for this kind of stuff. I leave it to Sarah and Lucas.
Yeah, for sure. So where is the screen? I'm not sure that is the pitch for the accountant that we can help retain the BSF business for self client if they're looking to buy a home. Yeah, the pitch is forward. I think forward planning. Adil can touch on this too. Kind of what he said he's looking for in a mortgage broker, but forward planning would be the biggest, that 2-year average that we're looking to lock in, or trying to figure out before they lock in, I should say. But it's not just to buy a home. It may be to buy an investment property. It may be to buy a vacation home. It may be to kind of break into that commercial space, right? So there's so many different avenues when it comes to being self-employed. We just kind of want to explain to the accountant that we're there to provide advice and forward plan. Like Adil said, you know, he appreciates the fact that we don't care that some of these deals are 2-3 years out. But what I've noticed from even the clients that we receive from accountants that are long-term, like far away from us even getting paid on it, they're so appreciative of the education and what we teach them about the process, so they could plan for next year to buy a home, that they end up sending you leads as well. So it's not just the leads you're getting from the accountant, it's the lead that you're getting from their friends, their family, and all that stuff, because they're like, oh, I talked to this broker and it just made sense. She explained to me what I have to do, and now I know what I have to do next year. So just keep in mind, it's not about one person you talk to. It could blow up into this like spider web of people, right? We talked about out of country. Adil already talked about Mexico.
Actually, I can touch base on that again. I reread her question. I don't think I addressed it properly because she said she read that if you go to a conference out of country that you can't write it off. So really, it's if you're at the end of the day, are you learning something that's going to help you with your business in Canada? So if you're going learning specifically how the real estate market works in Mexico, you might not be able to. So it's hard for Siri to know that, but you got to be, as long as you're learning something that's helping you with your, because at the end of the day, the goal is to deduct something, you have to be benefiting your business. So if you're learning something totally separate, or you want to a conference totally separate from what you do and has no added value, then, and it's obvious that if the government looks at it, then they might not let you write that out. But if it's somewhat benefiting you for what you're doing for your business, you're giving you some sort of tips, which is hard for them to prove it's not, then you can deduct it.
So what Adele is saying is our next My Broker Pro meeting should be held in Mexico.
Yes, yeah. So that's a perfect example. If you guys are learning this stuff and you guys are all in Mexico for that, that's 100% deductible.
Yeah,
so.
yeah. I think that would be an excellent idea. I'll talk to Luke about it tonight. Okay, so link doesn't work. I'm not too sure. Brochure. Oh, sorry. So the brochure link that I must have posted didn't work. So I will share it again. When should you register as sole prop? I don't really know how that works, Adele, behind the scenes. Like once you become, is registration when you register your business with the city, or?
Yeah, exactly. I would do it as soon as if you're self-employed, you register as sole proprietor, but that's your option. There's sole proprietor partnerships, incorporations, joint ventures. Like, so if you're running your, if you're self-employed, I would register as sole proprietor. And then pretty much it would come down to whether you're sole proprietor. Then when you want to incorporate, then that's the next step. But yeah, I would do it right at the beginning. There's no reason not to.
Yeah, perfect. Great presentation. Thank you. Okay, awesome. So I'll just post the brochure again because I must have messed up the link. What do I do here? But you guys can find it on the shop as well, which is just My Broker.
I have a question.
Yeah, for sure. I'll open up the queue. I think if they're still here, a couple of people have questions. So go ahead, Philippe.
Yeah, so I'm a part of the Bricks Mortgage Group. You showed a brochure about the financial planner.
Yeah.
Would that be a part of our thing, or that we'll have to pay for?
No, if you're with Bricks, everything is free except for social media management. I'm just
okay. So all your brochure will be available.
Yeah. So as of right now on the Bricks marketing website, I just have you're correct, the financial planner one. Let me check 1 second. BRX. Might even be, yeah, the self-employed brochure is on the first page of that marketing website. And then, but we will have a whole page of the rest of the brochures.
Oh yeah, because I like the one that you just showed briefly. I didn't see much of it, but
yeah, this one's so you'll get access to these thinking about retirement. So it's a good one for financial planners.
Especially that one. I'm more curious about that one.
Yeah, and then we have for financial planners thinking about downsizing is another one. I've got some for first-time home buyers. Pretty much, so the backstory for kind of where I've developed a lot of these pamphlets, because a lot of people are like, how do you have time for this? So anyways, I gave my whole volume book of business to my husband. But prior to that, when I wasn't busy, I just always took feedback from realtors that I worked with and said, like, what do you need? So they'd be like, oh, I need this. My financial planner wanted a brochure. I created a brochure. So I always just took feedback for what people wanted and created it. So if you're new to the industry, now is a great time to be creating what I call assets for your business, right? So
what was the finish? High gloss. What was the finish on
high
those?
gloss? Yeah.
That's high gloss. That's it.
Yeah, and it's on Canva, it doesn't cost extra to go high gloss, so I recommend it. It just looks a lot nicer. The paper's thicker. It's just it's more professional. But yeah, so I created a lot of this stuff, and now I'm sharing it kind of at I think a really affordable price. Like the brochures are like $5 to $10, and then the presentations are done for you like $35. And then a lot of the time now that My Broker Pro is growing, a lot of agents too are like, I want this, I want that. So we kind of are evolving on ideas. Like with BRX, we just had a marketing mastermind on Monday with a lot of the agents, and they just basically blasted out ideas of what they were all thinking of. And at that point, I'm going to create whatever I can. So yeah, depending on your business model, if you've got the time to create it or not now, it's always great to have these things in your pocket when you need them. And I forced my husband husband to carry them around as well. So, and then there was a couple more people who had their hands. I see Jane, if you're still on the call. Ashley printed some yesterday. You're welcome, Ashley. Roshan, I see you're there, so we'll start with
Yeah,
you.
I have a few questions. Yeah, first of all, thank you, Sarah, and thank you, Adil.
You're welcome.
Yeah, for Adil, the question is, okay, this may be a dumber question for T1 generals, right? Because what is the right term, or verbiage to ask? Is a complete T1, because sometimes we experiment with this so that accountants get that, because most of the times we get just the tax summary, right?
Yeah. I would just ask for your actual full tax return, because when I print a tax return for someone, it has everything plus the schedules. So that's what we send to the clients. I'd never even send them a summary, because they can't really use that. So I'll just
So
show
is there
them
a
a
proper
summary.
term for that, Adil, or they're just
Yeah,
asking?
I always call it like a full tax return. Like lots of brokers and bankers will ask for T1 generals. That's T1 generals, just the part of your tax return. So if
Okay.
if you get the full tax return, it has everything in it. Yeah.
Okay.
Yeah, the question to Sarah now, for submission, right? Because see, in the banking world where I worked before, we were coached that we don't have to send that complete, full package of T1 general. It's almost about 40 pages or something like that. So what underwriters are looking at, are looking to see is only first 7 to 8 pages. That's what they needed. Is that right?
Yeah, so what I'm gonna jump back to your question with Adil. So what I do is I do ask my clients, I always say the full tax returns, including, if they're sole proprietor, the T2125. So that's the name of that one that shows all the write-offs, T2125. So that's very good. And then I always put, because I keep a template in my email when I email my clients. So I always says the same thing. And I put that in like bold, full tax returns plus T2125 or your business financials. So then when they send me back the slip, I'm like, no, I asked you from the beginning that I want the full one, right? So definitely important to gather. Self-employed is always a mess when we're doing those. So we want to either ask for, well, we always want to ask for everything up front, in my opinion. And two, an easy way around that is I'd love to connect with your accountant to make this easier with you. Now you're messaging Adil. Adil knows what to provide you. He knows what a full T1 general is, or full tax return with the T2125. And you can go back and forth and keep the client out of it. They usually ask the client's permission first, and then they'll work with you from there. And then what a great way for you when your deal goes really well to be like, hey, accountant, that was awesome working together with you and your clients. I'd love to provide more value for your other clients. And now all of a sudden you may have a new referral partner. So getting in touch with the accountant is kind of like has two benefits, of course. So then going back to submission, that's going to vary between lender and which program that you're doing. So like, for example, TD doesn't really require, this shocked me because when I was at Bank of Montreal, we had to provide everything. We had to provide the full tax returns, full T1s, generals, business financials, everything was documented, which was great for me to learn and everything like that. But then when I moved over to the broker channel, I was surprised TD, if they were incorporated and paid themselves a salary, they didn't even really need the business financials. And I was like, that seems strange to me. But as a professional, you're still going to gather it. That was one thing when my husband entered the industry, he was like, well, do I need it if they don't ask for it? I'm like, yes, because you want to read it. Make sure that it makes sense so that if they do ask for it, your deal isn't going to collapse, because they have the right to ask. Every lender has the right to ask for whatever document they want. So if you, even though they don't require it as like a traditional set of their documents, all of a sudden, if they're like, oh, they really want to dig into what the revenue or the loss or whatever the company is in the financials, and you're having to provide it, and maybe not to say you're hiding something, but maybe you didn't look at it, and it's showing a decline, or maybe they're not even operating anymore, because you can still pay yourself T4s for years. I'm sure Adil can say this after your company isn't operating. So it's going to show a decline, and then you show that to the lender and they're going to be like, oh, okay, well, I can't extend money because this doesn't sustain itself long term.
Yeah, we could like with the T5s, you don't actually have to physically pay it. It's just on paper that you're
Yeah.
creating it. So someone can make $0 and I can do like a $80,000 T5 for them. So then they can
Yeah.
have a tax slip on their personal taxes that shows $80,000, but really they're in like an $80,000 deficit in the company and they didn't actually physically pay that money. So sometimes it does make sense to look at the whole picture because you
And
can
that's
easily
what-
get away with that. Yeah.
The lenders have access to that. I've had it where a lady was, her husband passed, so she took over the business. She hadn't run it in like 10 years, but it had so much money in the operating company that she was still paying herself about $60,000 a year. And, but she was maybe 3 or 4 years away from that being empty. So the lenders, when they did ask for the tax returns, that showed, okay, business isn't in operation. She only has 3 years left of sustainable income. Well, now that 60K I was trying to use, even though she had a 2-year average, didn't make sense. So you always want to collect everything to educate your client on the possible outcome. But of course, we can shop around for people who require less documents. The stated income program, again, is very generic. They don't require a ton of documentation. Some of the lenders just need like a proof of business license for 2 years. So we tend, as mortgage brokers, we don't have to send income documents. We don't, right? So, but doesn't mean you shouldn't look at them to ensure that that story that you're telling makes sense. So, sorry, Roshan, doesn't really answer your question in full because it's going to really vary from lender to lender.
Okay. All right.
And just go ahead. I was just going to say quickly to touch on what Sarah was saying. If you ask for that full tax return, it has the 2125 in it. It has everything in it.
Mhm.
So if you get the full tax return, it's going to have like their taxes plus all the schedules plus their business income. So that should be good enough. But yeah, that's what I would just ask for is a full tax return.
Yeah, my question was, by submitting, am I killing the deal? Because it one time it kind of happened. So
Yeah.
once they see it something, like they can't unsee it, right?
They can't unsee it. Yeah. So strategically as a broker, I mean, we can choose the program we send to and the documents, right? But that doesn't mean that if you hadn't sent that document, if the lender would have looked at it and said, they could have asked for it anyways, Roshan. So it's not necessarily that you killed the deal. However, that does happen. So yeah, it's not it's not easy because of how different each lender is. So all of a sudden you're used to sending your income documents, you do it and it kills the deal. Whereas you could have just sent the business tax licenses for 2 years and that's all they would have required possibly for the stated income. But that's not to say like if you had looked through it all and you had educated your client, like I could probably squeeze this through First Nats program or Merrick's or whatever, but just letting you know based on what I've reviewed in your tax returns, there's a high possibility if they ask for this documentation that it's not sustainable, right? So we try to do our clients favors, but you want to always educate them on the possible outcome because then if it does happen, there's no surprises.
Yeah, in my case, it was T4 income, which was not currently, he was not T4 because he was previously T4, but now solely, he became, incorporated and he was claiming that, like let's say not T4 income. He was still making more, but since that T4 income from the last 2 years is not continued, I think they see, they are looking into the source of income, right? Like on the line 150, what is the source of income? I think that's what they look into the T1 generals.
So what you can do is like we were kind of talking about this presentation about like getting leads from accountants, but you can take your clients to accountants too and say, hey, my client's trying to buy a house. They had T4 income for the past 3 years. They're incorporated. Can we keep the T4 income the same for the next year to get them approved? So you can talk to your clients and say, can I have a conversation with your accountant just to make sure we need to keep this consistent. So you can kind of use it the other ways as you guys reach out to the accountants to help them help you.
Mm-hmm.
Yeah.
So my following question is, statement of real estate and business professional activities, right? So is it the verbiage only for corporation or does it apply for self-employed also, like sole proprietor also?
I would say that the statement of, well, I guess it depends. Hey, like the T2125 is when you're sole proprietor only.
Yeah, so you won't have a retained earnings. So what the difference is in 2125, you're still a sole proprietor. Everything's coming to your personal name. So you just have to report your revenues and expenses on there, nothing else. If you're incorporated, now it's a separate entity. So any excess earnings stays in the company. You have retained earnings. So you won't have retained earnings as a sole proprietor, but you will as a if you incorporate, because now you're corporate, it's a separate entity that has its separate financials, and any money left in it will go to your retained earnings.
We call that, just so you know, Rashawn, business financials. So if even though the person's incorporated, they may have business financials and they may still have statement of real estate activities, right?
Yeah.
In their T1s. But as far as the T2125, it's kind of one or the other, unless they have two companies. But if they're sole proprietor, you'll get the T2125, part of the T1 tax returns.
Okay.
And then if they're incorporated, you'll get the business financials. And just so you know, that the way that this is structured, because it's presented by the CPA and they stamp on it, it could look very different per statement as well. So it's something to familiarize sometimes. And again, that's where you lean back on your accountants. I've seen some where I'm like, I don't even know how to read this, because they're not always the same. They follow a same like gross income structure and this and that, but sometimes the verbiage, I mean, we're not accountants, so I'll like lean back on a dill, like, what does this mean? Why would they have done this? Or whatever that is, or calling the accountant themselves and asking, because they're not as straightforward. The T2125, everybody follows the same template. So it's pretty easy to read, but yeah, self-employed documents are a beast of their own to learn.
Yeah. Okay. My last question, if you allow me, my last question is about asking for business financials, right? Like the lenders wants the recent year, 2 years. So let's say we are doing, some of the companies, their tax years, I think it's from June to June.
Yeah, it can be any month. Yeah.
Right?
You can pick any month to be your tax year, so it could be any month of the year, it could be the year end.
So we can ask, because it costs money for the clients, right, to get, because many a times I see that business financials are not available. So it's, I think, upon request or something like that, they're preparing. So what's the right way to ask? Like the lenders wants 2 years of, financials.
Yeah. So technically, just give you a quick timeline. For your business financials, you can pick any month. So say it's like June, or it could be July year end. Your taxes have to be paid within 3 months of year end, and then your filing deadlines within 6 months of year end. So if it's a June year end, you have to have it filed by the end of December. So some account, like, it depends on how bad you need them, but usually we aim to have it done within 3 months of year end. So and then if you have clients that need it like mid-year and they don't have it, like, we could do a draft financials for you, but it won't be, we usually tie it to the tax return, which is at the end of the month. So if you need something, like I said, I think it's a really good idea to reach out, to be in touch with your clients' accountants, just so they know, like, hey, we have this coming up, but come up with a plan ahead of time for this is what we're going to need. What do you think? So I work with a lot of brokers on that, and just as they need things, we come up with a plan for how can we get this information to you without delaying the process that you guys need.
Yeah, so a lot of them, like Adil mentioned, they can do what's called interim financials, and this may cost the client additional money because it's time for the accountant to create essentially a separate set of documents. So we can ask for that if we really need it. So I obviously tell the client, based on what Adil said, if they're like 4 or 5 months past their year end, so it's June and it's December and they haven't done their year end yet, the client, the lender for sure is going to be like, okay, well, they need to get their taxes done before they can buy a house. And that seems like an obvious answer, because even people who are not done their personal taxes in March and then or April, and then they want to buy a house in June, but their taxes aren't done yet. I'm like, you need your taxes done. So for us, it seems obvious, but for the client, sometimes it's just they see what's in front of them. They want the house, right? So you can ask for what's called interim financials if you really do need them. And that will kind of just break up the gap between the year. So that's only recommended, again, if you absolutely need them, because it's an additional cost to the client. But otherwise, you would follow the year end whenever it's done. And then hopefully there's 2 years history of that. If not, there's a sole proprietor year history. So you get 2 full ones to show. That gets harder to figure out the averages and stuff because they're taxed so differently. But you can kind of go that route. Or what I was going to say, interim financials, business finance. Usually business financials show 2 years, right, Adil?
Yeah.
They kind of show
comparatives.
the 2 years as well. I had something else.
For interim, what I do, because obviously we don't want the client to spend more money either to have us do something. So if they have a bookkeeper that's done it in, like, say, QuickBooks or Sage or something that they have there, they can just print like a mid-year interim report of their financials, and sometimes that's good enough. But if the lender wants to see an accountant signing off, that's when they'll have to pay us to do something. But we try to get them away without having to spend that money. So
and
usually
it
it's just
depends on the lender. I've seen where the bookkeeper tries to do it, but then the lender comes back and says, no, I want the accountant stamp on it, right? So again, lender dependent. But yeah, usually just asking for the 2 years business financials is what you're going to strive for. And if they don't, then you'll have to ask for personal income tax returns. That's where it starts to get messy. So again, like Adil said, reaching out to the accountant to come up with the plan.
Is notice to readers is the same thing? Business.
That's the business financial she's talking about. They're called, notice to readers. Yeah, but it's just pretty much just exactly what you said. Business financial. Yeah.
What I forgot I was going to say, and I just remembered is, so some companies are incorporated and they don't want to pay money to get actual business financials done because they're not drawing money from it, or for whatever reason. The deal would know more than me. Some lenders on exception will accept the T2s and corporate NOAs in lieu of business financials, but not as common. I've only seen that kind of on exception a couple times. But that's the verbiage. You can't get the T2 without the corporate NOA. The lender won't accept it. But anyways, great questions, Rashawn. Anything else before we move on? I see there's a couple hands up of these.
Yeah, I would let other ask.
We'll come back to you for sure. And Adil, if you have to hop off, feel free. I know you're a busy guy. So.
Oh, I'm good.
Okay, perfect. I see M. Boomsma. And that cute baby, is that person still here? Nope. And then Jane, are you still here too? I see you had your hand up previously. I don't really know. It shows me that their hands are raised, but
I'm still here, but I accidentally pushed the wrong button.
Oh, okay. Go ahead.
Sorry.
So you didn't have a question?
I did have a question.
Perfect.
So I just became licensed like late December.
Congrats.
So I have paid for, sorry, all of my licensing stuff, things like Canva and, those sorts of yearly fees that you need to pay for certain things. Is it worth filing business taxes, even though I didn't draw anything and I was only licensed for a few days of 2022?
I would, depending on how much your accountant charges you and how much you could save. Like I've had some clients like this too. Like if it's gonna cost you a bit more to get your taxes done and you don't save enough money, then I wouldn't. But if you have other income, like from like January to November before you became licensed, then you can use that to write off against your other income and get you a bigger refund. So I would definitely take advantage of that.
I was a stay-at-home mom up until I became licensed for 2022 anyways.
Okay.
So
yeah, if it doesn't impact your taxes, it doesn't give you a bigger refund, I would just try to get that into your 2022 tax return, or sorry, your 2023 tax return.
Unless I guess Adil, like if household income, would it help any? Like
no, because she'd have to write that on her specific tax return. So if her income was low and it would really give her no benefit, it would just be, she wouldn't get any more money back. But then I would just claim in 2023 when you have your mortgage broker commissions too.
okay, so I'm able to hold on to everything that I paid out in 2022 for my 2023 taxes?
Yeah, like technically speaking, they want you to put it in 2022, but like business wise, it's related to your company. I would claim it in 2023, and because it's going to get you more money back then.
Okay, perfect.
As you know, too, there's lots of expenses with brokerages. So that first year is nice to keep all that stuff. So be sure, like if you bought a new laptop, your fees to join your brokerage, your provincial fees to become a broker, if you're paying for anything, definitely keep it. Because even us, like we knew, like I said, I came from the bank, so there was obviously a book of business there, but still a lot of write-offs in our first year. Adil helped us. It was really messy. but it just, there's that is kind of one, again, if you don't know if you're going to buy a house, you might want to think about claiming some income. But for us, it was all about like bringing that tax bracket down. And there's lots of things in your first year that you're purchasing. And you'll notice as ongoing fees as well, right? I don't know what company you work for, but if you have monthly fees, like $150
I'm with Bricks, so.
With Bricks, yeah. So the $150, you'll want to keep those receipts monthly, all that kind of stuff as well, right? So those are all fees associated with our business.
Perfect. Thanks so much for the presentation, guys. It was very, very helpful.
No problem. Glad you could join. I see Tamara has her hand up. Tamara.
Yes, thank you. Sorry, I didn't know how to put it back down after I unmuted. Thank you very much. I've been in and out of the presentation most of the day. But I had a question for Adil, I guess. I'm just wondering, because you're not in Ontario, is my understanding. Is that correct?
Yeah, I'm
Okay,
based in BC.
and I'm just wondering, in terms of like for self-employed individuals, as most of us on here are, what would we look for in finding a really good accountant that could help us plan for these things and these discussions that we had today?
So definitely, I work with a lot of clients in Ontario. Really, the only big difference is there's different tax brackets. So it's just working within those tax brackets. So to make sure, but really, like what I look for just in general when you're looking for partnerships or any type of account, is just someone that's kind of wanting to strategically help their clients and you. So if there's some, because a lot of accountants will just get your taxes with the information you give them, process it, and to say this is much taxes you owe, which technically their job is to give you to do your taxes, but they're not really thinking, okay, what does next year look like? What are you trying to accomplish?
Right.
So how can I help you get to the next level? So that's kind of just someone that you want to partner with that's really forward thinking.
Mm-hmm.
Yeah.
Exactly.
And Tamara,
yeah, because I'm looking at myself,
but
really.
it can help across Canada. So if you do need help.
Okay, thank you. That's
Yeah, that's what I do. I do have lots
things.
I have lots of clients.
You won't say it, but I will. He's excellent.
Yeah.
So you can definitely.
Yeah, because much like some of my clients, my background is a mess as well in terms of, taxes and just corporate structure and different things, because I do multiple things. So yeah, I'm just looking for someone that could really help me clean it up and figure things out. Thank you.
And that's exactly what happened with us, Tamara. Obviously, our business grew from sole prop. We opened up 2 more businesses on top of that. So now Adil, between him and our lawyer, actually, we've kind of got this triangle going on, and it's just like been so helpful, especially the last year for us, where we're transitioning some of these business from sole prop to incorporated. This year, I reached out to Adil. I'm like, oh my God, I need a bookkeeper. Like, I can't even keep track of this stuff anymore. So definitely want. If I suggest working with Adil, of course, because I have experience with them, but if you're looking for somebody local, then definitely quiz them, because I've worked with the accountants before that. And like Adil said, they just process, they like fill in the blanks.
And that's my experience. And I would really like to get that help. I mean, it's not my forte, obviously. So I'd prefer to just get someone who knows what they're doing, knows what they're talking about, to get me some help with that. So thank you. And Adil, I will reach out to you.
Okay, definitely. And I'll just quickly, I should have said this earlier, but I do free consults. So like if you want just to kind of go over your situation with me and see what my initial thoughts are and advice, that's not going to cost you anything.
Perfect. Thank you. Do you have like a booking link or something, or do I just send you an email?
I would just send me an email. Like I mentioned at the beginning, I'm starting this brand new company, so email is probably the best for now, but I will have all that set up.
I'll put it in the chat.
Thank you. Thanks, guys.
Focus CPA. Adil, just check to see if I got that right in the chat.
Yeah, that's good.
Okay, perfect. Yeah, it is. Being self-employed, even though like I've helped lots of other self-employed people, it's its own beast. And obviously having the right people in your corner will make a huge impact on how your business grows and succeeds, because we're very lucky in the broker channel to not have like high overhead cost. We don't have vans that we're running, or we tend to not have a bunch of employees and that kind of stuff. So we strategically can obviously work at having some really good cost savings and incomes and revenue and that kind of stuff. So definitely things you want to think about. I've talked to Adil and our lawyer and even our financial planner about what that looks like, about like, because we own more than one company, should we pay ourselves from this company and then keep money in this company so that it can grow? So it's, you want somebody you can feel comfortable asking those questions as you grow and your vision grows as well, right? So, and then, so Rashawn, I see you had another question here. Why dividends are required to be deducted from net income by a lender to consider retained earnings?
So it says why dividends are required to be deducted from net income by a lender to consider retained earnings. Okay, so one thing, dividends aren't deducted from net income, so but a salary is. So that's one of the differences between salary and dividends. So say you made 200,000 and you paid yourself 100,000, your net income is going to show as 100,000. If you made 200,000, you paid yourself dividends of 100,000, then your income still showing is 200,000. It doesn't get deducted from your net income. So it's not an actual expense that goes on your income statement. So, but it does reduce your retained earnings. So that's just one thing, that the income won't look as good in the company if you're doing the salary, because it's going to deduct it against your income. But at the end of the day, retained earnings will be the same from whether it's salary or dividend. So I wouldn't like, so I'm not sure if the question is if it says why dividends are required to be deducted from net income, because they aren't deducted from net income.
Okay.
I think you're saying maybe the lender sometimes use it that way. Some lenders are pretty picky on even using retained earnings, and that's only going to be in an incorporated company.
Oh, I think I know your question. Now you're saying, why do they require dividends to be deducted? It's because it's not deducted initially. That's probably why. So like I said, if you pay yourself 100,000, it's not showing that on there in your net income. So then your net income is kind of like not.
You can't double dip.
It doesn't show you the true number because you did pay yourself $100,000 or something. So that's what I think. That's probably what you're asking is why they consider that, because it's because you physically
did not type it properly. Maybe
you're physically paying yourself, and it's not reducing your income. Yeah. So
yeah, no, and then like I said, the retained earnings are usually like on exception or high net worth programs, right? Because it's
because
just
Scotia is the only one who uses who is using this, because they have a BFS Plus program for a ESI, right? Because
TD will do it on exception. TD will do it on exception because TD has their business for self program, and what they'll do is like extended ratios, and you have to figure out. Anyways, it's a whole. I just did a training session with our team on it, and it was an hour and a half as well with our BDM, because just on that program, because of how complex it is. So basically for them, you have to figure out what ratios you're kind of looking at and figure out what gross up you would need from there. And if we can fill in the blanks with retained earnings or cash in the company, that kind of stuff, then sometimes they'll make the exception, but it's got to go straight up to head office. So for example, one of my agents just used this program. He's very familiar. He comes from the banking world, so he's very familiar with business for self and not a rookie by any means. And he was able to squeeze file through the cracks with TD and not Scotia. So it got declined at Scotia, because that was their thought to go to Scotia, and it got declined because that's actually where he came from, was Scotia. And
biased.
yeah. And then so then he did this. I set him up with our BDM, and she walked him through, and he was like, wow, this is crazy. But it got declined the first time. So the BDM had to go back and say, no, this was structured properly, and really had to fight for him, and it got approved. So not a common practice with TD. Manulife has a great program too, but you have to send like 5 deals to Manulife before they open up to you. So that's what I was saying. Our team's really excited. We just got access to their top tier program. So I can't wait to do that
Sarah,
training program.
Sarah, one more question. Let's say when you're offering to an accountant, right, to let's say the forward planning. So in that case, you will request the accountant to provide the T1 generals and all, or just ask the numbers and say this is how you want to write.
I would always ask for the documents.
Because,
we're going to need the documents anyways. So if the client's comfortable with us working directly with the accountant, and the accountant talks to the client to make sure, that they're allowed to share that information, then yeah, it's great working with the accountant, but asking for the documents, not the numbers, because we have to use specific numbers for our calculations. And like Adil says, he leaves that for us, right? Versus just using the numbers, telling your client, hey, it's going to work out, and then all of a sudden it doesn't, right? Say hi.
Thank you so much. I think I have taken both of your time.
Yeah, no problem.
A lot of time.
Anybody else on the call still have some questions? Looks like that's it. Okay, well, thanks again, Adil, and especially for staying on the call for this long. We're all wishing you all the best, and obviously you and I will chat soon. And then, yeah, thanks everybody else for joining.
Thank you so much.
Perfect. Thank you.
I'm
Yeah,
going to
for sure.
stay on, so you guys feel free to log off. I'm just going to hit to the end record button, everything, but I'll say goodbye to everyone anyways.
Thank you.
Okay, bye.
Bye.